Hi, this is Michael Jones, Chairman and CEO of Caravel Concepts. Welcome to Market Insights, our commentary on economic and financial market events. Let's get started. Investors are going to hear a lot about infrastructure programs in 2021. But since the U.S. infrastructure program, the one that's probably most of interest to our viewers, is still being negotiated between Democrats and Republicans, we thought we would start that conversation with what is likely to be the largest infrastructure program in all of human history, and that is China's Belt and Road Initiative. What we thought we would do with this video is give investors an idea as to what Belt and Road is, what some of the concerns about Belt and Road are, and why investors really need to understand this initiative and what it may mean for financial markets. Now, as we have this conversation, I think it's really important that we make a distinction that is often blurred in a lot of commentary about initiatives that come out of Beijing. And that is that there is the Chinese people, 1.3 billion of them, and there's a tiny sliver of people at the very top of that pyramid in the Chinese Communist Party. All the initiatives, all the things we're going to be talking about are coming from that tiny little sliver of people at the top of the Chinese Communist Party. And if anything I say sounds like I'm not sure that this is necessarily the best thing in the world for the people of Montenegro or Greece or some of the other recipients of Belt and Road Initiative funding, well, the blame should go not to the Chinese people, but to those tiny people at the top of the pyramid in the Chinese Communist Party. And if I fail to make that distinction throughout this video, remember that I made it now. It is a program. China initially marketed it as the New Silk Road. For those of you who are history buffs, the Silk Road was this long series of trading routes that connected China to the Roman Empire, to the Byzantine Empire, to the Ottoman Empire. It was like the most important trading connection for most of human history. And the Chinese Communist Party is kind of like wanting to market the Belt and Road as a way to re-energize and revitalize world trade through a series of harbor and port facilities, railroads, highways, and so forth. And the idea is to make it much cheaper for China to ship their goods abroad and much cheaper for China to import the raw materials and the things they need to manufacture into those exports. So that's the main drive of Belt and Road. Now, Belt and Road creates some serious issues, especially given the extraordinary breadth of this program, because 171 countries have signed on for one Belt and Road initiative or another. There's a Belt and Road project going on every continent in the world except for North America. Now, the majority of the projects, though, you will see in Asia, Eastern Europe, and Africa. All right? And how these infrastructure programs are being funded is almost exclusively from the Chinese government. Now, they may be working through a state-owned bank, or they created a state-owned, multi-country financing arm, but the vast majority of the funding is coming from Beijing decides what they want to lend to, a state-owned bank says, yes, sir, Beijing, and they lend the money directly to a government, like the Sri Lankan government, or the Greek government, or the Montenegrin government. And in many instances, because these loans are essentially from government to government, I mean, there's a state-owned bank in the middle, but they don't really count. Beijing's calling the shots. Because it's essentially government to government, in many instances, there's not much transparency about the loan terms and the way that these loans will be resolved if anything goes wrong. And when some of these loans that have gone wrong, like the Montenegrin loan, like the Sri Lankan loan, what we're finding is that the loan agreements give Beijing the right to adjudicate any restructuring of the loan in Chinese Communist Party courts. So you know how much fairness is going to be there. And in many instances, they have the right, if the loan isn't repaid, to grab big chunks of land in the countries that they've lent to, or take over major port facilities or infrastructure like the railroads that they built. And in some instances, they're even allowed to take over the tax authorities that collect the custom duties at different ports and harbors. So essentially they can step into the government's shoes and say, no, you're not going to pay your taxes to this government, you're going to pay it to a Chinese bank.
That's weird.
So let me say at the very outset that there are innumerable environmental concerns about many of these Belt and Road initiatives, but since each one of those is very particular to the specific project being undertaken, and since I don't know a lot about that stuff anyway, I'm going to skip over to the economic and geopolitical concerns that are more universal to almost every Belt and Road initiative. So one of the biggest criticisms that has been made of Belt and Road is it's the wrong solution to the right problem. So if you were to go back into the 50s and 60s and 70s, the World Bank and the IMF, they made tons of infrastructure loans that kind of smell a lot like the Belt and Road Initiative loans, except of course they were doing transparent lending terms and much more subsidized, and yet none of it turned into anything good. And the World Bank and the IMF have largely in the last several decades pulled back from that kind of lending. And that's what created the vacuum that China could step into with their Belt and Road Initiative. The reason why the World Bank and IMF pulled back is they realized that although infrastructure is a big problem in a lot of these countries, the infrastructure will not be profitably utilized unless you address the bureaucracy, the red tape, and the, in many instances, endemic corruption in a lot of these countries. And so Belt and Road, do these countries need infrastructure? Absolutely. But the experience of the World Bank is the infrastructure will not do any good if you don't first address some of these other problems. And in many instances, the Belt and Road mechanisms are actually making the red tape, the bureaucracy, and the corruption worse. All right? Another issue that is being brought up frequently is that the work that is being done on these projects is being done exclusively just about by Chinese companies with Chinese workers that they are bringing over from China. All right, so it's not creating quite the economic lift for the local economy that you might have thought. There's not the skill transfer for construction skills in both the labor force and also engineering and some of the higher level. Those skills are not being transported into the host countries because they're all being dominated by Chinese workers and Chinese companies. And in many instances, according to a lot of human rights groups' investigations, it's no picnic for the Chinese workers. Because in many instances, the first thing that happens when they hit the ground in Africa or Latin America or Southeast Asia to do these infrastructure projects is their passport is taken by the Chinese company that they work for. And they're essentially indentured servants with very few rights and very little way to appeal if their working conditions are not good. They don't have a passport. They can't go home. So it's not even, in many instances, according to some investigations, it's been a very difficult thing for the Chinese workers who are part of the project. And probably the biggest complaint that has been made is that this whole notion of we're going to lend you money to build stuff. And if you don't pay us back, we're going to take chunks of your land, or we're going to take over the stuff that we built, or we're going to take over your taxing authority. That's a familiar script to a lot of these countries because it's exactly the program that the British Empire and the United States followed through the latter half of the 1800s and the first half of the 1900s, where the British would come in and they would build railroads, and if you couldn't pay it back, well, then they'd take your railroad, or they'd take a chunk of your country. And if the U.S. built your harbor infrastructure in Venezuela or Nicaragua and they didn't get paid back, the Marines would come in, they'd take over your customs house and start collecting the taxes. And instead of sending them to the capital of the country, they'd send them to New York or London, wherever the banks were located. This is not a new strategy for potentially compromising the sovereign integrity of different countries. Now, of course, the Chinese Communist Party is very quick to say, we're not going to do that, we would never do that, but I suspect if you went back into the 1800s and asked the British leaders and the US leaders, are you trying to take over these countries? It's, oh, no, we wouldn't do that. So, a little skeptical on my part.
Don't be suspicious. Don't be suspicious. Don't be suspicious. Don't be suspicious.
Because it sounds so familiar to the history that these countries have undergone. And as a matter of fact, one of the emerging markets that is leading the charge against Belt and Road is India. Because India said, hey, we've seen this script before. We've read all this in our history books with the British Empire, and we simply are not going to let China do the same thing to us or to our neighbors. All right, let's talk about some of the modern day examples of how this has gone wrong. And recognize that just like bridges that don't fall down don't make the news, the things that you hear about are the disasters. There may be an equal number of great things that are happening in Belt and Road, but you just don't seem to hear about too many of them. So the big hot button right now is in Montenegro, where the prior Montenegrin government negotiated in complete secret an agreement with Beijing to build about a 125-mile highway that was going to connect their ports to the capital of their neighboring country, Serbia. That's a great idea. More stuff coming through. The problem is that they borrowed $1 billion to build it. Their total GDP is less than $5 billion. There are only 600,000 Montenegrins, and they now owe China $1 billion. And guess what? They've spent it, and they've only built 25 miles of a 125-mile road. And if it doesn't connect to that capital in Serbia, then it's useless. It's literally a road to nowhere. They have no idea how they're going to repay it. They have gone to the European Union and said, hey, could you please loan us $1 billion so we can pay back China? Now, I want you to imagine how popular the notion of the EU giving money so that you can pay back debt to China is. It's not. And so they've said no. But if they do not pay back this loan, then it gives China the loan restructuring will be handled by Beijing courts. So you can't expect Montenegro to necessarily get a fair shake there. And China has the right to take over large chunks of Montenegrin land, and they have the right to take over some of their taxing authority. Essentially, Montenegro could lose some of their sovereignty to Beijing. This is a really big deal. Now, let's also recognize it's also a big opportunity for Beijing. If Beijing shows mercy, they have the right to do all those terrible things. And if they do, a lot of people are going to back off of the Belt and Road projects. So if Beijing instead said, you know what, we're going to work with you, I don't know what they could do, but somehow find a way not to crush Montenegro, not to take over major parts of their sovereignty, hey, maybe good things will happen. But it's certainly, if I were a Montenegrin, I would be feeling very uncomfortable that the future of my country is entirely going to be determined not in my country, but in Beijing. And that's the problem. Greece is another example, very different. Greece, giant Chinese shipping company COSCO took over the port of Piraeus, which, it needed huge amounts of upgrades and infrastructure and so forth. And it's been a huge success. The amount of shipping that is going into the Athens port has increased dramatically. It's created a nice economic revitalization throughout the entire area. So what's the problem? Well, Costco wants to increase their ownership by 66% by 266%, even though they haven't met all of the goals that they were supposed to have. And they said, you just need to do it anyway, because we're now a really important employer to you guys. So they're throwing their muscle around quite a bit. The other thing that is really upsetting all the Greek companies that are working around the port is that it's impossible to compete with Costco, because there's a state-owned enterprise that works with state-owned enterprises that get huge subsidies from Beijing. And so they can undercut anybody. And they have a policy of, once stuff arrives in Athens, if anything needs to be put onto a smaller ship and moved around to the different Mediterranean ports, exclusively Chinese-owned vessels, which means they're shutting out all the local Greek shipping companies. And if you know anything about Greece's history, it's always been a center of shipping for 3,000 years. And they're essentially finding themselves being squeezed out of a business that they kind of helped pioneer. So lots of issues that need to be resolved. But none of this is telling you, why should I, as an investor, care? I don't live in Greece. I don't live in Montenegro. I don't live in any country that is that's receiving Belt and Road funding. So let's go for the upside first, and then we'll talk about the downside concerns. So the upside is, when Belt and Road was first announced about 6 or 7 years ago, there were a lot of analysts that said this is going to be a golden age for emerging market equity investment, because this amazing infrastructure with Chinese money is going to be built. And you can imagine some of these emerging markets doing just what China did. They're going to get great highways and high-speed rail and ports and infrastructure, and it's going to improve their productivity, and their economies are going to boom, and their stock markets are going to boom, and it's going to be awesome. All right. There's been a lot of water over the dam since those initial hopes, and we're still waiting for that big payoff. But it's probably too soon to say that that payoff can't happen, and that some of those amazing benefits of this infrastructure may not occur. However, count me a little skeptical. And the reason why I'm a little skeptical is because of these one-sided lending agreements, and the fact that so many of these projects seem to be running into debt problems early on in their lives. I'm also skeptical that state-owned enterprises are dominating every Belt and Road initiative. It's not the private sector. There are privately owned companies in China, but they're not really a part of this deal. This is all being driven by state-owned enterprises that are massively subsidized. Really hard for those local companies to get a big lift and to get a big surge of productivity. They're not getting knowledge transfer, and they're being crowded out of markets that they used to dominate. And state-owned enterprises, as they become more and more important in the Chinese stock market because of all this Belt and Road money, you also find that their return on equity, the return on equity in Chinese markets, is going down because state-owned enterprises are a bigger part of the mix. And competition with state-owned enterprises in local emerging markets driving down their return on equity potentially. So I'm actually more concerned than optimistic about what this could mean for emerging market debt. What about in the U.S., where this has nothing to do with us, does it? Well, possibly, because the Belt and Road Initiative is consuming trillions of capital in every single solitary year. And if you were to go back before the pandemic, before September of 2019, when Fed Chairman Powell started printing money to bail out the US government, before we were printing money in massive amounts, the big thesis that everybody was pointing to say, why will interest rates stay low for a long period of time? All this excess savings in China. And those excess savings are depressing interest rates all around the world. And by depressing interest rates, they're driving up stock prices. That's awesome. Well, now trillions of money is being diverted out of bond markets and equity markets and into these infrastructure projects. We have not seen the impact of that because since September of 2019, the Federal Reserve has been printing money. And since March of 2020 and the pandemic's global catastrophic effects on the economy, the Fed has been printing trillions upon trillions, and so has the European Central Bank and the central banks really all around the world. So we haven't needed Chinese savings to keep interest rates low because we've been printing a boatload of money. What happens if the Fed starts cutting back on the money printing? And with the inflation statistics we're seeing, the pressure is rising on them to do just that. So if they start cutting back on the money printing, what is the implications for interest rates if that pool of excess savings in China that used to be depressing interest rates has been soaked up into quasi-useless projects like the Montenegrin Road to Nowhere? It won't be there to keep our interest rates down, and it could have serious implications for our financial markets. Particularly serious since the US is about to engage in a big infrastructure deal as well. And at the latest G20 meetings, the Western democracies are looking to launch their own competitor to the Belt and Road Initiative. So there'll be more infrastructure spending, more need for capital, which means more potential pressure on interest rates, with very big consequences potentially for bond investors, certainly, but also potential headwinds that we haven't felt for equity markets for quite some time. Thanks for joining us for Market Insights. We hope you found it informative. If you did, we hope you can like the video and share it with your friends. If you'd like to see more of our research, you can check out our website, caravelconcepts.com, or you can subscribe at the link below. Thanks.
So why does China have so much money that they can lend to other countries?
So China has all this money because China runs a giant trade surplus with the rest of the world, predominantly with the United States, but with the rest of the world as well. And what that means is that we buy goods from China with dollars. And when China gets those dollars, they could convert them back into their local currency, the yuan. But what that would do is it would drive up the value of the yuan, and it would then make their exports more expensive, and so they wouldn't export as much. So they don't want that to happen. So what they want to do is find something to do with these dollars. What can I do with these dollars? And so for most of the last 20 years, when they've been running these big trade surpluses with the US, they bought US Treasury bonds, US Treasury notes, US Treasury bills, US agencies. These are government debt obligations. They helped us finance our deficits, right? Increasingly, because we've kept interest rates at zero for so much of the last 12 years, they're like, is there something else we can do with our money? And the Belt and Road Initiative is becoming another idea about how can we find ways to spend our money and earn better than zero, which is what we're getting on US Treasury bills these days. And of course, since President Xi never does anything without another ulterior motive, it's not just about the money, it's also by lending to Africa and Eastern Europe and lending into Southeast Asia, can I possibly increase China's influence on the policies that these countries pursue?
Are there other countries that have that kind of money to be able to lend out, or is it really just China's, if you need money, China's the only place that you can really get it?
So there are a lot of people who would argue that China itself does not have this money, because if you look domestically, they still have a lot of people who are in desperate poverty, as desperately poor as anyone in Sri Lanka, and certainly as desperately poor as anyone in Greece or Montenegro. So, there are domestic forces that are not happy that China is devoting this trillions and trillions of dollars to elevating potentially the lifestyle and standards of living in other countries. But having said that, China is the country that is sitting on the biggest pools of capital sloshing around. They could convert that money back into their domestic economy and help domestic things, but for right now, they don't feel the political pressure to do that. That Chinese people may be unhappy that they're spending money, but the Chinese people don't get much of a say in what Beijing does. Chinese Communist Party has lots of people with guns and secret police and so forth that make sure that the Chinese people are kept in their sphere. And so, and right now they see this as a very profitable way long term for China to deploy the money. Profitable not necessarily in the return that they get, but maybe profitable in the influence and the geopolitical power that they get.
So there really isn't another option as far as countries that will lend money to other countries for infrastructure.
So
China's kind of it.
Well, the United States is trying to put together a consortium of countries in the G20 to try and do something similar. But whenever you do a poll of the American people and they say, what should we do about the deficit? The number one thing that always comes up is eliminate foreign aid. Mm-hmm. There is very little political support for the kind of massive program. Now, we don't do a whole lot of foreign aid as a percentage of our budget, but nonetheless, American people just, they are no more supportive of it than the Chinese people. And unlike the Chinese people, the American people get to vote.
Right.
And they get to actually, influence us. The other thing that, and we need to be very clear about this, when the World Bank is a source of potential money, the IMF, and let's say that this new infrastructure program that Biden somehow he gets it through Congress, all right, despite the fact that the American people hate foreign aid, all right, even if he does, the World Bank and the IMF, and I assure you this new U.S. program will apply strict corruption and transparency standards. You're not going to be able to do things like the Montenegro government steered about 30% of the money that was allocated for domestic companies in Montenegro. About 30% went straight to cronies of the president. 30%. And they're not going to allow that kind of blatant corruption in a program that is administered by the World Bank or the US. And so if you're a country and you're led by a corrupt leader and China's saying, here's money, no questions asked, and America's saying, I want a lot of documentation, I want to make sure that you got a competitive bidding process going on, blah, blah, blah. That's a race to the bottom.
So that's not necessarily Montenegro or Greece. Are they super corrupt?
Montenegro is the one where 30% of it went to. Yeah, and tragically, Greece is pretty notorious for having less than stellar, governance. It's not. I would not say that kind of blatant corruption you saw in Montenegro, but certainly. It would not be good. And think about a lot of this lending is happening across Latin America and Africa, Southeast Asia, and a lot of it's being focused into truly reprehensible countries like Myanmar. How does the Myanmar military stay in control? Venezuela. China is also using this money to help prop up regimes that help reinforce their message that autocracy good, democracy bad.